use your car for work-related purposes, then you can claim a tax deduction. How you go about the claim and how much you can claim will depend on a number of factors, including whether you're a sole practitioner or an employee and how many kilometres you travel during the year. So first, how do you determine if your travel is work-related? Your travel is considered work-related if you travel directly between two different workplaces or you travel in the course of work from your normal workplace to an alternative workplace, such as from your consulting rooms to the hospital. Home to work travel is generally not considered work-related unless you're required to carry bulky equipment for your work or your home is the base of work. An example of this might be where you're on call and you begin to treat a patient before you leave home. So how do you make a claim? If you operate as a sole practitioner, then you have two options for claiming a tax deduction. The first is the cents per kilometre method, where you claim a flat rate of 66 cents for each kilometre travelled. This is the easiest to use and there's little documentation required. The downside with this method is that the maximum you can claim is 5,000 kilometres. So if you do lots of driving, then this may not give you the best result. If you travel more than 5,000 business kilometres in a year, then you can use the logbook method. The logbook is a record of travel done over 12 weeks. The logbook then provides a standard percentage of business use, which can be applied to all expenses for that car. If your car is owned by a company or a trust and you're an employee of that entity, then different rules do apply to ensure that it's not liable for fringe benefits tax in relation to the motor vehicle expenses. If you'd like to know more about what deductions you can claim, contact us at the details below.